environment. We've actually had 2 sessions so far. Our first session was the importance of a good foundation, where we looked at chart of accounts and cost centers, method of accounting, general ledger software, unit costing, and financial self-assessment for that first session. We did session number 2, where it was really that planning and resource allocation. And we looked at best practices in budget development, examples of budget models, and the orientation to program financial modeling. So today, I'm happy to have you here, where we're going to talk about revenue cycle management. How do we really do risk management, clarify communications and accountability, financial self-assessment at the end. I am going to ask folks to please keep yourself on mute during the presentation. Please feel free to chat in any questions. We have a team behind the scenes that will be checking the chat and will be answering your questions, and we'll make sure that David also is aware of those questions that you have. I think that's all for now for housekeeping, and we'll let David take it away. Thanks.
Thank you, Tricia, and good afternoon, everybody. Welcome back. As Tricia said, we're on part 3, and today we're going to do operational processes and workflows. I put this in as a session because I think that our thinking about operational processes and workflows is just something that happens in the background. But it is such a critical factor of the work that we do. If you step back and think about it, everything really is a workflow. Information moves through, data moves through. We have processes. We have people who have different parts of a process. I mean, I'm sure you've all seen workflows. If you close your eyes, you can see these workflows and how information moves and tasks move. But our workflows many times can be inefficient and ineffective, and really put our organization at risk, at financial risk, at regulatory risk. So I'm going to spend some time today talking about some of the key operational processes and workflows. And we're going to focus on revenue cycle management. We're going to take a look at the concepts of internal controls and segregation of responsibilities, maybe in a little broader kind of context than you've thought about before. Spend a little time on risk management. I'm going to invite Tricia back to talk a little bit about clarity, communication, and accountability. We'll have our normal financial self-assessment, and then we'll have some time at the end for conversation. By now, most of you folks know who I am. For those who may not, been doing this for a long time. I'm a Senior Director for Fiscal Performance Improvement at CCSI. CCSI is a technical assistance in business management services, working primarily in New York State and with our behavioral health and IDD providers around the state. So why are we doing this now? Well, what have we learned? What have we recently learned? Well, one of the things we've absolutely learned is our operating environment can change dramatically and rapidly. I would venture a guess that nobody had an emergency plan or a business continuity plan that took into effect that our sites would be closed down for 6 or 7 months. So, we know change can happen, and it can happen very quickly. But when you're in an environment of change, particularly in an environment of uncertainty, a strong financial foundation is essential for long-term financial stability. Accurate, timely, and well-organized financial data, it's just necessary to navigate change and to make sound decisions. Right now, we're managing in uncertainty. What is the trajectory of services going forward? How much telehealth are we going to be using? What are the reactions of our clients going to be? How quickly are we going to come out of that? Well, some basic information about what's happening that you can follow longitudinally, understanding your revenues are down, when they start picking up, the changes in your cost structure. There's just essential information for making decisions not only in normal times, but certainly in extraordinary times. And fixing your gaps in your financial operations during crisis is obviously not preferable. And people talk about you can't build an airplane while it's in the air. So part of the process here is to take some time to think about your financial practices, and as things stabilize, put plans in place for strengthening them. And finally, and I talk about this all the time, is financial operations and clinical operations are intertwined. Can't manage in operational silos any longer. We really need clinical leadership, financial leadership at the same table, communicating directly with the same language, with the same goals, and to really allow us to move forward in a sustainable fashion. So let's talk about workflows. What are we talking about? Just a particular type of how a particular type of work is organized, or the order of tasks in a particular work process. Nothing terribly complicated about this, but you think about it is things work through our system all the time. I'm going to talk about revenue cycle management. Well, that's a workflow. Something as simple as paying an invoice has a workflow. Somebody opens the mail, somebody stamps it, somebody passes it to accounting, somebody pays the bill, somebody does the reconciliation at the end of the month, somebody assures that your check stock is secured. I mean, this is all part of a workflow, and we'll talk about our internal controls a little bit later. So really, I would argue that everything we do is based upon some kind of workflow. So when we think about the workflows, what are we trying to accomplish? Well, in my mind, what we're trying to do is find an efficient and effective way to get the work done. You know, we try to wrangle efficiencies out of our operations all the time, but I think that one of the areas that we fail to look at is efficiencies within our workflow. So how efficient is it? How accurate is it? How effective is it? So what are some of the questions that we have as it relates to our workflow? Well, what are the exact jobs to be done? So if you think of a workflow, you have these little boxes, you have these little tasks that have to be accomplished to achieve a goal. So within that, so what are the tasks and who's responsible? One of the areas that I see workflows break down all the time is there's not a clarity about who's responsible for what. What are the sequences? A lot of our workflow are sequential. One person does something, they pass it to another person, they pass it to another person. So there's this flow of work, and we need to understand the sequences. What are the time, tools, and guidance that's needed? Time. How long should it take to do something? When do you need to have it done so the next person can do their job? What's the level of accuracy that you need? Some of our workflows need 100% accuracy all the time. Some may not. What are the tools? We'll talk a little bit about using technology to support our workflows. And guidance. What are the guidance we give to our staff? Well, guidance can be in different forms. Guidance can be in a policy and a procedure. Guidance can be in a job description. The guidance could be in mandatory training. So not only do we need to understand what are the jobs, who's responsible, what's the sequence, but what's the infrastructure that we need to build around this workflow to make sure it's effective. And then how do we measure workflow effectiveness? Sometimes we don't know how effective. Sometimes we find that our workflow is ineffective well after a fact. You may have put a workflow in place that required that you pay your invoices on time so you don't get charged for late fees. And it's 6 months and somebody sits down and looks and said, wow, we paid $1,000 in late fees over the last 6 months. Well, why is that? Well, the workflow was ineffective and it was inefficient. So these are the kind of, when we think about workflows and processes, these are the kind of the context that we think about. Jobs, responsibilities, sequence, tools, and effectiveness. So let's use revenue cycle management as one of the examples. You know, what would be revenue cycle management? Well, it's all the administrative and clinical functions that contribute to capturing, managing, and collecting client service revenue. Revenue cycle management. And the revenue, it's called revenue cycle management because it is a cycle, has different levels of activity, different people involved, and it needs to be managed. It's really the life cycle of a client account from a creation to payment collection and resolution. And when we think about, in the next slide I'll show you, when we think about the account cycle, there's other sort of supporting activities that are necessary to assure all encounters are billable, they meet regulatory requirements, and the revenue collection is maximized. Well, what might that look like? Well, this is sort of a visualization that I've been using for a couple of years. I like the way that it sort of lays out the process. So what is the process here? Well, we start with scheduling, pre-registration. You're going to have particularly when, these were really sort of kind of pre-COVID thinking, but there's still a scheduling process that goes on. There may be information that we need, particularly before a first visit. We need some insurance information. So we have this sort of front door process, and you may have a scheduler doing that. You may have your clinicians doing that. You may have front office staff doing that, but somebody's sort of doing this first stage. And then if we have an on-premise service, we have a point of service registration. Well, what happens at point of service registration? Well, we need to check somebody in. We need to make sure that their data, all their information regarding them is still correct, their address, their telephone number. We need to make sure that their insurance is eligible, that they're there at the right time. So we have this registration piece. And that's probably more of a front office kind of staff. Then the next step in this is charge capture and coding. And who's involved? This is your clinical staff providing the clinical services, charge capture and coding. So that's sort of a way of saying, all right, we had a clinical intervention. That clinical intervention needs to be documented. We need a timestamp on that. We need a progress note on that. We need to assure that the intervention was on the care plan, that we need to make sure that the progress note was signed. We need to make sure that the bill related to that service is consistent with the note. And so we have a number of different people involved with this. Charge capture and coding. You're going to have your clinical staff who's doing your documentation. You may have your quality assurance staff who is checking and verifying and reconciling and ensure that the documentation matches the service that was provided, is consistent with the care plan, because that's going to flow down into claim submission. And the goal here is to start at the beginning, schedule, assure eligibility, capture all the information necessary, document it in a way that's necessary, and then create a clean claim that we can then send out the door. So we have clinical staff, we have front office staff, we have our billing staff now involved in this process. So the next step is a remittance. We get a payment. We get a payment coming in. Somebody's responsible for posting that. We have to post that. But 9 times out of 10, or maybe 10 times out of 10, the amount that you're paid is not the exact amount that you may have submitted. So once we've posted that, we've analyzed that, then we may need to do payer follow-up. We may have denied claims. We may have pending claims. We need to understand, why is there a variance between what we sent out the door and what we received back? And what part of that was our error that we can now no longer recoup that payment, and how much of that was possibly a error in the claims going out the door that we can fix, or a problem with the payer that needs to be reconciled. I understand chasing payers down is a time-consuming and difficult process, but it is a necessary process as part of this revenue cycle management. And then finally, analysis. We talked about how do we know that our processes are working? Well, what's the goal of a revenue cycle? It's to maximize revenue. Are you maximizing revenue? No. To what degree? So I'm going to take a look at the denial report. So 10% of my claims are being denied. Well, why are they being denied? What can we do differently? Where are the problems within the workflow? Are they a problem with our billing software? Are they a problem with the way that we're documenting our services? Are there a problem with our eligibility verification? So we need these reports, we need these analysis to help us understand, first of all, how well the process is working, what is the variance against what we expect, and then you do the root cause analysis, looking back, figure out where's the problem, and you fix it. You'll see in the circle, in the middle of the circle, I already talked about quality assurance. Well, the other portions of this to assure that you can maximize revenue is contract management, certainly credential compliance. If you have a specific credential that is necessary for a service and that service is not provided by that credentialed individual, that's a denied claim. Then utilization review. How are we utilizing our resources? Who are our high utilizers? Why is that happening? Who are our high no-shows? Why is that happening? How do we sort of take a look at the system and understand our utilization patterns to help inform us to make decisions to make these processes more efficient? So let's take a look at revenue cycle management. What is the goal? This is just another way of conceptualizing the same sort of information. The goal is to maximize the collection and retention of client revenues. I want to make a point here in terms of retention. For anybody who's gone through an office, an OMIG office, the Medicaid Inspector General audit, and had to pay back money, that's errors in the revenue cycle process that led to you being paid for claims you should not have been paid for. And the Inspector General staff will come in, they'll find that, they'll calculate an error rate, they'll multiply that error rate against the universe of billing, and you will owe money back. So even though you're paid in real time does not necessarily mean you can retain that over the long term. And some of those steps inside that revenue cycle are really designed to assure retention. We need to manage credentials and client assignments, quality assurance and regulatory compliance. What do we need? We need efficient scheduling, verification and authorization, follow-up denials, analyze, and then there's certainly our capture and coding of all of our counters, getting claims out timely, and proper claims postings. This is the same information that was in sort of the flow. It's just really put together in a different kind of a context. But one of the things to think about is each process and each workflow has a goal. We're trying to accomplish something. And many of them we're also trying to mitigate risk. And we'll talk more about risk later. So revenue cycle management, what is the risk? The risk is leaving money on the table, and that affects our financial sustainability. The risk is being paid for claims that we should not have been paid for, that we will owe back in the future. So what are we trying to do? We have a goal, and part of what we need to do is mitigate the risks associated with not meeting that goal. So I'm going to talk about foundations of effective revenue cycle management, but these are the foundations of all effective workflows. So the first thing is clearly articulated and monitored. I mean, workflows people need to understand what they are. You have billing policy and procedures. You have financial policies and procedures. You have clinical policies and procedures. And in many cases, those policies and procedures define workflows. They need to be clear. And within those workflows, one of the things that I find most often is we get bottlenecks in systems. And bottlenecks in systems can happen for a whole variety of different reasons. Sometimes there's just too much expectation on one individual's responsibility in the workflow, and they just can't manage the volume of work that's necessary. Sometimes that individual is improperly trained, so it may take them longer than we anticipated. There may be high error rates. There can be all kinds of bottlenecks in systems. So we need to, first of all, really clearly document and understand our workflows. We need an ability to evaluate them, find out root causes, and eliminate them. And, the second foundation is staffing. Sufficient staffing, properly trained. I get a question all the time. People say, well, how much billing staff should we have? It sounds like we bill out $2 million, how much billing staff? We bill out $10 million, how much billing staff should we have? That is an impossible question to answer, partly because I don't know what your workflows are. I don't know if you have efficient workflows. I don't know if you have good quality assurance. I don't know if it takes a lot of time and energy to make sure that you've got clean claims coming out of the door. I don't know if you're following up on a lot of denials. I don't know if you've got a lot of commercial payers that you're constantly trying to chase down. But what I do know is efficient revenue cycle and any efficient workflow requires less staff and less cost than inefficient ones. So staffing, you need sufficient staffing, and they need to be properly trained. And their expectations need to be clearly defined and evaluated. One of the things is that I talk about in terms of workflows. When you have an inefficient workflow, one of the things you have to do is you have to determine whether you're a people problem or a system problem. I always came at my inefficient workflows with the idea that this is my problem, this is a system problem, because if you have an individual in your workflow who is ineffective, I'm going to assume that person is not sufficiently trained. I'm going to assume that even if they are efficiently, I'm not giving them the tools necessary for them to perform, or that I'm not giving them enough time, my expectations are too high, or I'm not evaluating them, giving them feedback and providing guidance how they can become better at their job. So what we never do is go after hitting people over the head. Let's assume that the problem is my problem and that there's something that needs to be addressed in the process. Sometimes it is a person problem, but that's not where we go to. And the first step is we begin evaluating inefficiencies in our workflows. Technology, integrated scheduling for revenue cycle management, clinical documentation, revenue cycle management, capacity that supports regulatory compliance. Those technologies that increase our efficiency are critical. And then oversight, regular reporting and analysis, monitoring, who's evaluating, one of the interests, and what are the steps that are being taken. So what are the challenges? And these are the challenges, I think, in a lot of workflows. We use revenue cycle management as an explicit example. Workflows, and many times, bring together work groups and staff who are not working closely in any other context. They're not working in the same location. They have different supervisors. So think about it. You've got these folks working together as a whole, but they're accountable to different individuals. That's normally not the way that we structure things out. But it happens in our workflows, and it certainly happens in our revenue cycle management workflows. Then interdependencies exist in all workflows. Sometimes they Interdependencies exist within naturally occurring work group. You have plenty of workflows in finance. That's a naturally occurring work group, but in revenue cycle management, this is not a naturally occurring work groups. Billing staff, remittance staff, staff that are doing follow-up, front office staff, clinical supervisors. Again, these are non-naturally occurring work groups. That can lead to confusion, that can lead to inefficiencies. Of course, in revenue cycle management, maximizing a revenue generation is critical for financial liability. Inefficiencies, errors, and lack of oversight can have devastating impact. Sure, devastating impact. You get an OMIG comes in and suddenly you owe $3 million back. And you have to make that out of current cash flow. That's certainly not something you reserved because you didn't think that you were going to have it. It can have devastating impact. Lack of collection of fees, inefficient revenue cycle management can have a devastating impact. Not evaluating risk well, agreeing to a unit cost that you can't make, all kinds of inefficiencies that can have devastating impact. And we see this in revenue cycle management. You may see it in other workflows where clinical priorities and fiscal billing priorities may not always be aligned. So that's why I always think about, particularly in revenue cycle management, where you have accountability in different places. That's why the documentation, clear articulation, and evaluation is so important. Everybody in the workflow needs to know what their tasks are, when they needed to be completed by, and what their error rate, allowable error rate is. They need to be evaluated against that on a regular basis. If they're falling short, then you need to make sure that they have the tools, the training, and the support to be effective in their work. So how do we address some of these challenges? Well, clearly articulating measurable performance standards for all staff. So one of the things, as I just said, is that I would consider taking a look at job descriptions. And if you took a job description and you said, okay, what are the 5 most important things that we need this person to do in their involvement in revenue cycle management, and make them measurable and then evaluate them. You bake it into your job description, you have a measurable standard, you evaluate individuals on a regular basis, your workflows will be efficient. And measure against these standards regularly, differentiate people problem from systems problem. Start with the fact that it is a systems problem. If it is a person's problem, that's where we sometimes fall down. I don't know if you've been involved with this, but I've been involved with this more times than I want to think about, is that we wait too long to discipline people. We wait too long sometimes to terminate people. We may do everything that we possibly can. There are situations where there is not a good match. And we need to take that into consideration when we finally work down to the fact that it is a person problem, making sure that we've given them every opportunity, every support, every training, and if it doesn't work, we need to take action. Sure, maximizing revenue is critical. Implement of a quality improvement process to assess problems. So you have to, the system's not working. You need a process in place to fix it. And as your workflows cross many different work groups, you need involvement from those work groups. And then finally, you need to, and I think this is critical, you need to assure that executive, clinical, and financial leadership are on the same page and speak with a single voice regarding revenue and critical role it plays in supporting the mission of the organization. Workflows, transcend work groups, they transcend supervisors, they transcend these kind of domains. So having executive, clinical, and financial leadership on board, speaking the same language, understanding the needs and the challenges and the goals, and working as a team to assure that these processes are effective and efficient. So that's sort of the revenue cycle management workflow. I'm going to pivot a little bit and talk about internal controls. A lot of times we think about internal controls from a financial standpoint as segregation of responsibilities, and I'll talk about segregation of responsibilities, and it is an important component of internal controls. But I want to talk about internal controls in a broader context. And so I'm going to talk about internal controls, their mechanisms, their rules, their procedures, their workflows that are implemented by a company to ensure the integrity of their financial and accounting information, promote accountability, and prevent fraud. So, besides complying with your laws and regulations and to prevent your employees from stealing your assets or committing fraud, internal controls can help improve operational efficiencies. They improve your accuracy and timeliness of financial reporting. So it's more than internal controls. And when we think about the key components of the internal controls process, first of all, I'm going to talk about these in more detail individually, but these are the different components. One component is your control environment. Another is your control activities. And the third is information and communication. Monitoring. We talked about monitoring in all our processes and workflows. How do you know that they're working? How do you know we're in compliance? How do you know that we're mitigating risk? And then finally, the risk assessment. So let's go on. And so let's first talk about the control and environment. This is really the foundation for other components of your internal controls. So the first thing is management and staff show integrity. Here's a question for you. How many of you have core values in your organization? And how many of you have one of your core values as integrity, honesty, openness? So one of the primary things is that management communicates the importance of integrity as really a core value that is important to the organization. Now, when I was a CFO, what we did is we went through and we took each job description and we put into each job description 5 fundamental tasks. We quantified what those were, and then we evaluated against those tasks. We also evaluated against core values. You could be falling down on one of your specific job duties, and we would work with you, and you may have a little bit of a training plan, and we'd look for improvement. But you'd normally not get a pass, but that was not seen as serious. What was serious is your failure to meet the core values. That was an all or none. You either met the core values of the organization or you didn't. And one of those core values was integrity. What else do you need? You need sound hiring practices, particularly when you hire for individuals who are going to be in your financial shop, who's going to have access to assets and resources. You need to properly vet folks. You need, and there's all kinds of mechanisms in place to assure that when we do our hiring, we do our due diligence before we hire somebody. Training. Worst case scenarios, we don't train our staff. How many of you have had this scenario? And I've had this scenario before. We have a workflow, put it in place, it's going along, everything's working fine. We get a little bit lax in monitoring, and then all of a sudden it hits, it's not working. And we go back and we scramble and say, what's happening, what's happening? What we find out is a new person is part of it. Somebody left and somebody was put in their place, and they weren't properly trained. Maybe that's only been my experience, but that's happened more times than I'd like to admit. Training of staff is critical in not only in a control environment, but also in managing workflows. And then appropriate discipline. Appropriate discipline. You know, we need to assure that people are following the policies and procedures. They're there for a reason. They're there to mitigate risk. They're there to protect our clients. They're there to protect other staff. In all those cases where people step outside of their expectation, there needs to be an appropriate discipline. Clear understanding of organizational structure. You need to know who makes, you know, who's making the decisions. Who should you be talking to? You know, who's in charge? Who's your supervisor? I don't think we fall down too much on that, but understanding organization is important for control. And then involvement of the board. You have a compliance officer. You bill Medicaid, you have a compliance officer. Compliance officer reports directly to the board of directors. They may have a dotted line reporting to the chief executive officer or executive director, but your board is involved in compliance, your board is involved in risk management at a very high level. And then internal controls as an operating style. That's just how we do it. There should never be any question about what the rules are, how you should be processing something, when you need to have it done, who you should talk to if you can't get it done, what's going to happen if you have errors. Or, I mean, it just should not happen. You should just have an operating style that those questions don't come up. So another area of interest is risk assessment. You know, risk assessment is the identification and analysis of risks that could prevent the organization from achieving its objectives. Risk assessment. So, and risk can be internal and it can be external. So let's think about some of the external risks. A pandemic that shut down our offices for 6 months and affected our staff, our revenue generation, our ability to meet our mission, the support we could give to the individuals we serve. External factor risk is reduction in state aid. And it's going to do the same thing. It's going to affect our ability to meet our mission. And it's going to put us at risk for our inability to provide the level of services that we need to provide. Those are external factors. And there's internal risk factors. And there's all kinds. I've been talking about those risks. There's revenue risk. There's regulatory requirement risk. There's all kind of internal things. So what we need to do is properly identify risk to determine how to mitigate and manage risk. So when I think about this, mitigate means that you can't eliminate. You need to have processes in place that if, in fact, whatever happens that you're trying to control against does happen, that you've minimized the risk. And I think of mitigating risk as primarily those external factors. So how could we minimize the risk of an adverse, how do we minimize the risk of a pandemic in the future? Well, we have our telehealth systems in place. We have good communication protocols between supervisors and staff. We have clear communications to our individuals we serve. Maybe we have a portal that they can log into. We can minimize the risk going forward. The internal risks I look at as managing risk. Those are the kind of things that we have control over. That's where we put this internal control structures in place. That's where we put our policies and procedures in place. That's why we evaluate every claim before it goes out the door. Those internal factors we manage. The external risks, I think, we mitigate. But the process we need to go through is all significant organizational changes, such as change in staffing, new policies, new software application, new regulations, new contracts. Everything should be subject to a formal risk assessment. Every time there is a significant change in your organization, the first question is, what is the risk? And then the second question is, how do we manage the risk, or how do we mitigate the risk? How do we lessen its impact if it happens? How do we manage it to assure that it doesn't happen? And this is a formal process. So let me give you an example of what a risk assessment may look like. So, we've got VBP contracts, we're part of IPAs. The world of reimbursement, although it may not have changed too much, I think there's an opportunity that it's going to change a bit more significantly going forward. So you're asked to sign a new contract to provide services at a specific reimbursement rate and agree to specific clinical outcomes. So one says, yeah, we're going to take X amount of dollars for service, and our clinical outcomes, if we don't meet them, there's going to be a clawback of some of the amount that we've been paid. So there's downside risk based upon your clinical outcomes. So what's the question here? What are your questions? So we've agreed to a specific reimbursement rate. Is our unit cost at or below the agreed upon rate? If it's below, you're going to make a margin. If it's at, you're going to break even, and it's above, you're going to lose money at it. Do you know what your unit cost is? Do you know what you're agreeing to? What's the risk of agreeing to a wrong rate, a rate that you can't manage? It's a financial risk. It's a financial sustainability risk. Do you have a system for measuring outcomes? We're agreeing to specific clinical outcomes. What if we can't measure them? What if we're not measuring them? If we're not measuring them, we may, again, be at financial risk. We could also be at risk for not providing proper services to the individuals we serve. That's the next question. How about, do we have a quality improvement program that can monitor performance and quickly make changes when necessary? Monitor our clinical outcome performance so we can pivot. We can impact those things. We could impact a higher unit cost than we agreed to, but we need to monitor against that, understand what the risk is, monitor against it, and have a process for making change. If we don't have that, we're at risk. And do you have sufficient staff to meet anticipated demand? The risk is that we're understaffed. We can have a risk that we're overstaffed, and then you, again, have financial risk. So this is just an example of something new within the system and some of the questions that I would go through to begin understanding where our risks are for some key components. So let's take this a little further. So this is sort of the formalization that I've used in risk assessment. It's really pretty simple. The first thing is definition of risk. So in this example, we currently don't have an outcome reporting system to measure and monitor agreed upon outcomes. So that's a risk. What's the level of risk? Well, it's high. Reimbursement is tied to achieving clinical outcomes. Significant financial risk would be in place for not meeting those goals. So we've defined what our risk is. We are basically responsible for receiving revenue against certain clinical outcomes. We don't have a way of measuring that. That's a high risk. We're going to have a clawback of resources that we can't cover in other ways. So what's the solution? Well, our solution is we're going to add a data element to the electronic health record. We're going to train staff on properly recording the data. We're going to monitor compliance. We're going to run reports monthly and review them by management. So we've defined the risk. We've defined how important the risk is, and then we've defined a solution. And you'll see in the solution a number of different elements: creating an outcome measure, training staff. Too many times I've taken a look at data that just is unusable because we didn't properly train staff on which of the drop-downs should you pick, and when should you never pick other, because that's the easiest one to pick, and you pick it all the time, and we don't know what information we're looking at. Train your staff properly. Monitor compliance. These tend to be new systems. When we put in new systems, it is critical that we monitor them. We can never feel confident that just because we put a new system in place and we articulated it and we trained everybody that it's going to work. If that works for you 100% of the time, then congratulations. But what I do know is you can never implement perfect new systems. You have to monitor them. And how do you do that? You run reports monthly. You review it. You have a quality assurance team. You pivot back. You make changes. You continue to monitor it. And Tricia will be talking a little bit about quality assurance a little bit later. And then the final thing is who's responsible. Somebody's got to be responsible for this. In this, we have our program directors, our program supervisors, and our quality improvement committee as being primarily responsible. So I hope you see that, really the risk mitigation is just such a critical, particularly in this changing environment that we work on. Where is the risk identified? Identify them both from an internal standpoint and an external standpoint. Mitigate your external risk, manage your internal risk, and then have a system for doing your risk assessment and your risk management. And this is just a simple outline for the way that you might want to do that. So let's move along. Control activities. So this is what we normally think about when we think about internal controls. It's a segregation of duties. There's policies and procedures that guide staff and mitigate risk. And the most important control activity is segregation of duties. And that is different individuals should be responsible for. As an example, authorizing transactions, recording transactions, having custody of assets, performing reconciliations. What you don't want to do is have one person do everything. Now, all too often, I may read in the newspaper an article in the local paper about somebody who was charged with embezzlement. Many times from smaller organizations, and the reason that there was no oversight, there was no segregation of responsibility. Somebody got all the checks in, somebody sent all the checks out, somebody did the bank reconciliations, they had control over the bank account, they had control over the credit card, they authorized payments, and at the end of the day, the organization is out assets. The way I think about this, and I had a 32-year career as a CFO, and luckily there was only one occasion where we had to actually terminate and charge a staff with embezzlement. That was in part my fault because I did not have an internal control structure in place that assured that that did not happen. Good people do bad things, and this is really to protect them and to protect the organization. Now, I understand there's difficulties for smaller organizations. Absolutely. I work with a small organization. There's a bookkeeper and there's an executive director. How do you how do you have proper segregation of duties when you just have few staff to do that? Well, I have a couple ideas. First is to have clear policy and procedures outlined in each staff responsibility. It just has to be absolutely certain. And if you're doing a bank reconciliation, then have the executive director look at it, and then have that be written in as part of the procedures that are in place. Have consistent and accurate documentation of activities. If you have somebody has to initial off on an invoice, have somebody initial off on an invoice every single time. Somebody has to stamp an invoice when they come in. Somebody has to stamp an invoice every single time. They have to be consistent. All of those procedures are part of your internal or segregation of responsibilities and your control environment. If you're not following them, that's where your risks come in. Build all staff into the process that you can. You have executive director, you have a bookkeeper, you may have an administrative assistant. Bring your program managers in. I mean, take any of the staff that I know it's a burden on staff, but you have to utilize your staff in this segregation response. Don't be afraid to bring a program manager in and give them some kind of task as part of your segregation of responsibilities. Something that, you can easily train. I don't think it's a bad idea for some of the program people to better understand some of the financial operations, some of the flows, some of the constraints, why we're doing why we're segregating responsibilities, have a little bit more oversight, have a little bit more view. So, but utilize all the staff that you can in this process. And of course, you have independent auditors. They're going to take your policy procedures, they're going to bang back processes. If they're good, my auditors would always come in, they'd say, okay, give me your policy and procedures, financial, they'd pick one, they'd go to the staff and they'd follow it through and make sure that we were, in fact, following that policy and procedure. Now, that is not a full internal control audit, but it is a random sample of our following our procedures designed for segregation of responsibility. And then board oversight. You can have board oversight for contracts. So you may have to review all contracts over a certain amount with your board president or your finance committee. Expenditures over a certain amount may need to be approved by the board. Expenditures outside of the annual budget may need to be approved by the board. So as you can see, what we're really looking at is there are opportunities in the small organization to use the resources that you have to really foster that and create a kind of internal control structure, organization, and a set of segregation of responsibilities that mitigates your risk, protects your staff, and protects your agency. So with that, I'm going to ask my colleague Trish Williams to step in and talk a little bit about information and communication and quality assurance. So welcome, Tricia, and take it away.
Thanks so much. So I actually want to bring us back to that concept that you brought to us at the very beginning of this, and that is financial and clinical operations are intertwined. So that bidirectional communication and that standardization is just so important to ensure the progress and the success of the organization, but the process and the success of revenue cycle management, of risk mitigation. And really, before we can talk about monitoring quality assurance and quality improvement, we have to talk about, is everybody aware and does everybody understand what their roles and responsibilities are? So really to hit that point home of everything you've been talking about is collecting that information and communicating it to the entire team. How do we make sure that everybody understands their roles and responsibilities? So we look at that staff performance evaluation. How do we make sure that folks understand where we are in our revenue cycle management? How well are we doing? Is our workflow working? Unless we're actually pulling out those monthly reports, outcome reports, and really looking at the information that we're pulling together and communicating that out. So transparency is really the most important piece of this to make sure that folks truly understand. And you had said in your slide previous to this about clear policies and procedures that outline staff responsibilities, that consistent and accurate documentation. We have to be able to communicate that to folks so that they're doing the work that we expect them to do. And then really that annual audit and being able to communicate to everyone the things that we can celebrate, that we did really well, and then those opportunities to make those improvements. So let's talk about monitoring and quality assurance. And, I think that was a lot of the basis of what you were describing throughout the beginning of this presentation. And that's really about, do we have the policies and procedures that we need to follow? Do we have a process to mitigate and to look at risk? How do we look at how staff is doing and reapply any correction that we need to make? What is our compliance? How are we monitoring all of that? So really, monitoring and quality assurance ensures the foundation of our effective revenue cycle management. So we monitor those workflows, we produce those regular reports and analyze how the workflows are working. We clearly understand who has the oversight of the process and have staff been trained efficiently and trained. And we have enough staff to be able to do the work that we need to get done. So the way that I kind of see quality assurance is as we're monitoring, we move to quality improvement. And with that thought of quality improvement, it's because we found something that wasn't working during our quality assurance processes. So let's talk about quality improvement. While we're delivering high quality clinical care to patients, we're all about the value and motivating how we're going to do quality, really to push forward those business strategies with real influence on the overall health of the organization. And that includes the financial performance. So we want to identify the gaps in the system and the process. We want to make changes that will lead to a better client outcome. And then we want to make the changes that will lead to a better agency and system performance. So the top 5 kind of quality improvement essentials are about, and I'm going to have actually David kind of stop for a second because I want to talk a little bit about those essentials. And that's the adaptive leadership. You're good. You are good, my friend. Analytics. What is our evidence and our consensus based on best practice? Adoption, and then financial alignment. So I think a lot of times when we talk about quality improvement, we are always thinking about the process that's related to the service provision. And sometimes we forget that the financial alignment is really important to that process and how it actually all comes together. So it's important for leaders to ask, what quality improvement initiatives do we prioritize based on the data that we have? And this is that opportunity to really work with financial teams to be able to start to pull that data where we could do a cost benefit analysis to determine what makes sense. Where maybe, for example, we already do better than the national benchmark measures. So do we want to do something that has a bigger impact on patient outcomes or cost? And so we would actually marry our financial data to help us make those decisions. So let's go to the next slide and let's talk about quality improvement model. So, many of us have heard of the PDCA or PDSA. Sometimes it's check and sometimes it's study. And so we actually want to focus in on the focus PDCA. It was created by the Hospital Corporation of America, the HCA, and it addresses the systemic process improvement method. So really it's about a knowledge of how a process is currently being performed to meet that customer need and the expectations used to plan and test the process. So focus portion identifies the area needing improvement. It brings together a team, and I think that's so important and something that David continues to talk about in every single session, which is that importance of the team approach, and the team approach of not only being your financial staff, but also those clinical staff. And that is that capability of achieving improvement, and then they get to select that solution. So why do we want to use this particular model? It doesn't require in-depth expertise. So even when you're working in a highly technical or scientific process, it's still easy enough that everyone can really go through the process. There's a wide range of people that can be involved, and bringing in that additional expertise to solve the problem. The method could be learned really quickly. It provides framework that guides improvement efforts. It clarifies the goal of the project that for everyone that's involved. You know, there's accountability for the completing of tasks. It supports the culture of continuous improvement. And the changes in success are based on measurable data and observations. So let's look at the first portion of this. Let's look at the focus portion of it. So find a process to improve. In some cases, you know, that process might be obvious. A process may not be meeting quality goals, or it might just not be meeting the needs of the customer in general. However, in other cases, there may not be a readily apparent need for improvement. So it's really about how do we bring all the processes fully together in alignment with our strategic goals for the organization. So that's when we take those opportunities. Organize the team. It's all about the team. The team should be composed of people who understand the process, but they don't need to be the experts of the process. The team should include those who are closest to the process. Clarify the current understanding of the process. So collecting data and information about the process. This may be done through, you know, just an actual physical measurement, but it should also include talking with some of those people involved, just so then you can answer the questions of who, what, where, when, and why, and how are people doing it. Understand the variation in the process. So every process includes variation, and some variations are acceptable, and some are not. When variations are interrupting the normal flow of the work, it may be a symptom of the problem of the process. So we want to make sure that we dive into that. And then select a strategy for improvement. And this is that step that may involve that brainstorming or other methods of developing ideas. So it's really about based on what was learned in the previous two steps. The best solution is then selected, and keeping in mind that the solution must be in alignment with the overall organization strategy and goals. So again, where David was talking about, you know, what are the core values, and putting those into the job descriptions, anything that you're doing when it comes to process improvement and quality improvement, all should be aligning back into those core values in the organization strategy. So David, if you go to the next slide, I think a lot of folks on the call are very familiar with this concept of really that plan, do, check, or study, act. And again, when we look at quality improvement and we look at our process, one of the biggest things that we want to remember is this is a continuous process. And if it was not a continuous process, then we would get rid of the study and the check, and we would just do this once. But really, in order for this to work, it means that we have to constantly be going back and studying the results. So again, just to kind of remind everybody, plan is that step where the problem is defined and the solutions begin to be developed. In the focus PDCA, that has already been really accomplished. So instead, the plan step is where the implementation of the solution begins. So it's based on the solution identified in that final step of the focus. The do is if it was not done as part of the focus, data must be collected to characterize the condition of the process before changes are really made. And then the required changes are made and we start to implement. That check, did the changes have the results that we were anticipating? And the data that we collect really helps us understand, are we actually doing what we wanted to do? And then that final act, that piece is to take the steps necessary to maintain the improvement. And really, how do we make sure that we are continuing to move forward, that we're continuing to monitor, and that we go back and we restudy to ensure we're doing all of the things that we want. So the purpose of the Focus PDCA is to provide that structure that guides the process of problem solving and process improvement. And by using the approach, it's really a comprehensive analysis, and it allows us to respond in a much more meaningful way. We have an action plan. We have a feedback loop that's established throughout this process. So that is really what we're recommending moving forward, for quality improvement models, and how you can approach when you've been monitoring and you identify that something may have fallen down, or, we have to do something different. So I think we want to move on to the financial self-assessment. So at the end of all of our sessions, we really ask folks to take a look at, what is going on with them and their organization. So we ask that you complete these. They're very simple questions. It's 6 questions that are yes and no. If you answer yes to all of them, you know what, that is fantastic. If you answer no to any of them, it's really about then maybe reflecting back on the sessions that we provided, and are there some things that you can put into place to help strengthen your financial infrastructure. So we do want to just share what those questions are that are part of the self-assessment. It's about leadership and actively monitoring the revenue cycle process. How is your staff involved? And again, really hitting home that whole importance of having a team, and that we're really intertwining our financial folks and our clinical folks to really be communicating. Does your organization train your staff on the core values of honesty, integrity? And again, we go back to everything that we're doing. We want to make sure always go back to what are our core values, and honesty and integrity are something that's really important as we move through this process. So then question 4, just about that formal system of evaluation. Are we able to adequately create that separation of duties? So again, going back to, do we have some guardrails and some really good expectations about what our staff are doing? And does your organization have active quality improvement program? So we are now moving toward the end of our presentation. We really encourage you to complete the self-assessment. You are more than welcome to share all of that information on the team's website. You can bring back this information to our office hours. So next steps is, we completed our session 3, and we want folks to continue to use the action plan and template. And so we have our upcoming sessions. So our office hours will be on October 22nd at 2 p.m. You will be able to pull up this PowerPoint on Teams. That's where all of our information is, and you can hit the registration link on this slide to register if you have not already. Please bring your action plan, bring questions. If there's things that you answered no to on your self-assessment, David and I would be happy to help assist you with really kind of answering those questions and diving a little bit deeper. And then our session 4, that is the last piece of our series. We're going to talk about looking at visualizing our information and our data, and how do we start to move that information forward. That is on November 4th at 2 o'clock. And again, the registration link is there. So I think we're ready for questions. I think that's where we are. So David, thank you for flipping through the slides and being an awesome keeper.
Yeah. Thank you, Tricia. So, yeah, I think that, although we talked about what tends to be dry topics, revenue cycle management, internal controls, quality improvement. Again, as I said in the beginning, I bake these into an entire session because they're, this is about fundamental infrastructure. And I think each of the understanding your workflows, mitigating your risk, and improving your quality are just absolutely essential to your financial sustainability, and I hope that we provided some context for you that helps move some of your thinking forward. And as Tricia said, if you answered no to any of those questions, you may want to step back and say maybe this is an area, and a fundamental area that we may need to start addressing. So we do have some time left, and we certainly are available to answer any questions you would like to chat in. So we just had one come. For smaller organizations, it is recommended that they might bring in an independent per diem or part-time fiscal expert to handle some of the separation of duties. Yeah, I think that's actually, it's funny that you should ask that question, because I've been working with a small organization for a number of years as an independent contractor. And what I do is I provide sort of CFO level work to the organization. We've reworked their chart of accounts. We've restructured their reporting. I actually do something, I create their payroll journal entry. So, I mean, payroll and fringe benefits are about 80% of your cost. So I have my hands on payroll as they come through. I work with the independent auditors, and so as part of that contract, I provide an important segregation of responsibility to the organization, and along with that, I provide a higher level insight in working on budget and reporting and structures that really, I think, benefits the organization. So yes, absolutely. I think that could be a very viable and workable solution for organizations, and it need not cost a lot. You know, I understand there are constraints, but I don't believe that under certain circumstances that should be an extremely costly way of supporting your separation of responsibilities. So we have one come in. Thanks so much as always. Well, thank you. We'd very much like to see a sample split of some of the terms, metrics you have seen baked into job descriptions. I think, well, all the job descriptions that we worked on when I was a CFO, I'm sure they would probably consider to be proprietary. But I think that, let me just talk through the process that we did. Is that we pulled each job description. And so let's take an example of a difficult one. Let's take a clinical staff, a direct service staff job description. Well, we ask direct service staff to do a lot of things, but they're part of the revenue cycle management. So one of the requirements is that a measurable requirement that we could measure against, which is an important aspect, that they had their case notes done by the end of each day. So how do you accomplish that? Well, maybe you have concurrent and collaborative documentation, but there are ways that you can do that. So we went and said, what is critical in terms of managing risk? One of the things is that, all the paperwork is done, it's complete, and it's consistent. We may have, that they have to maintain their credentialing, maybe another thing. But what we went through is we took each job description, and some are easier than others, I will admit that, and it's a long process, and it was a lot of wrangling, and it was very painful. But at the end of the day, what we wanted to do is we wanted to provide feedback to our individual staff. First of all, we wanted to communicate to them as what we believed was essential. The second piece is that we wanted to be able to measure it. We didn't want any subjectivity as part of this evaluation. If I had a report that could be run, I didn't get it, the clinical leadership and supervisors got it, of the paperwork that was left undone at the end of the day. Okay, so that was measurable. Somebody letting their credentials lapse, that is measurable. Somebody, I don't know what the other ones were. It's sometimes a little bit easier with financial staff, or billing staff, that they're responsible for billing every week. That by 3 o'clock on Friday, the bills from the prior week were processed and out the door. Or somebody responsible for remittance. Within 3 days, they've reconciled all the remittance. Or, however you want to think about that. But you really break down each of the tasks, understand why it's critical, how you can measure it, put it into the job description, and then create a performance evaluation. Our performance evaluation evaluated. We had a system where for everybody, you'd load in their job description, it would bring up the critical elements. You were able to evaluate, you pulled your measurement data, you evaluated, then you evaluated on core values. And if you were below a certain score, you had a work plan or a performance improvement plan that was put in place.
David?
If you were in a, yeah.
Another suggestion just of how to
Sure,
create
absolutely.
those terms and those metrics is really to go back up to what your workflow is. So, as you were talking about, you're going to do these workflows and you're going to start to identify, who are those people? And I always think of like the RACEs that we do for workflows, right? So what's the responsibilities, the accountabilities, and really, if we're creating the workflow and we're starting to identify what are all of those tasks that have to be done and who are those people responsible for it, that really helps to inform the job description and helps to inform like what are those tasks that person has to do. And again, our workflow should be measuring, so then it starts to dive down into then those measurement pieces.
Yeah, absolutely. And I think that for me, when you make these definitions, you define the measurable task, you define when it needs to be done by, right? My example was, essential task, proper documentation by the end of the day, 100% of the time. And so then when somebody signs their job description, they sign on that they understand what their primary responsibilities are, what they're going to be evaluated against. And it's that clarity of communication that allows you to hold folks accountable, but also to identify where some of your own lacking. It's not, the performance evaluations are not necessarily, as I said before, to find out where we can in fact punish people. It's finding out where we can in fact help and really enhance people's ability to do their job. With the first question always being, what did we miss? What did I miss? Was the training proper? Were the tools proper? Was the communication proper? Were the evaluations done? The worst case scenario, and I've seen this in all kinds of organizations, one of the assessment questions I have in an organization is, do you have a performance evaluation? And, oh, yeah, absolutely. Do you do it regularly? Well, not really. How do you hold folks accountable if you have an performance evaluation system that is designed to create an environment that you can help them be more successful, but you don't implement it, you don't do it regularly, you don't communicate to people? In my mind, that's a worst case scenario. So, and it's a kind of accountability piece is, again, clear, quantifiable goals, clearly communicated with with an evaluation system geared towards finding the gaps that are in the system that is leading to the performance that stands outside of what you expect. And then that allows you to restructure your communication, your training, give people different tools. At the end of the day, I always thought, it's true, people really, they just want to do a good job. and the performance evaluation clarity of communication is a way of supporting their ability to do that. Sorry, I can't give you templates, but hopefully an understanding of sort of the approach that we took, which I thought was really extreme. And part of what we were trying to do is we wanted to sort of create a bonus system in some way, shape, or form, and having quantifiable goals that were not were not subjective was the only fair way of going about doing that. And so that was part of the goal that we had, not only to identify gaps that we could help mitigate, but also to have a system where we could perform, where we could reward folks who are really going above and beyond. You're welcome. Chat came in, very helpful. Thank you very much, with a smiley face. You're welcome very much, with a smiley face. Only I get to do it in person. Other questions? We do have a couple minutes left. Well, I'm going to pitch next presentation on November, whatever that was. I mean, I'm sure
November 4th.
colleague Tricia will remember these things because she's very good at that. We're going to start, we're going to do some work around data analytics, some of the tools. I'm a huge Excel guy. There are some really very good business intelligence tools now in Excel that we'll talk a little bit about. I'll show you some of the examples of some of the monitoring systems that we have put in place. Really is the culmination. I mean, through these we've talked about monitoring, reporting. There are good ways of doing that, and there are poor ways of doing that. Good quality, timely data, analyzed well, visualized in a way that you don't have to teach people how to be statisticians to take a look at their data, understand it, and really help drive the kind of decisions that we need to make. So that's I think it's you may find that to be very helpful. It's something I'm always excited about and talk a lot about, because I think that we can all up our game a little bit when it comes to accessing, analyzing, and visualizing our data across all of our domains. So I hope you will join us on the 4th. So any other questions before we give you an extra 6 minutes in your life?
Thanks, David.
Well, thank you very much for attending. I want to thank Tricia Williams very much. She's a valued colleague who brings, I think, a great deal of insight and experience to these conversations. Thank you again. Thanks. There's a couple folks behind the scenes that you weren't able to see that helps us bring these forward. And thank you very much, Jason, Jocelyn, Lynette. And thanks, folks, and we'll talk to you on the 4th. Have a great day. Take care now. Bye-bye.
Bye, everybody.